Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 25th COT report of 2016, and as usual we're going to start off with the changes in commercials positions. So here we go. As you may see, we've got copper on top of a list with a 22% change in commercials positions. You may see the change size over here, which is of course larger than average, but we do see greater changes in the past. This change is of course a bearish signal that may affect prices in the upcoming few days, and of course we're expecting prices to move a bit down towards that signal. But if you look at the 5-year chart that I just opened to you, you may see a bullish picture because of the COT Extreme situation that we have. Of course, we had such extremes in the market in the past, and you can see that the general trend did not change, and of course we're not saying that it's going to change right now, but nevertheless you may see how well these extremes pinpointed a little bottoms in the trend that managed to halt this decline and push prices a bit higher. And of course even such a move may be a profitable trade if one takes such a signal. So keep your eyes on copper market. There may be a trading opportunity here. Moving on to the Canadian dollar, where we have a 20% change in commercial positions, 17 in large speculators, and 23% change in small speculators. You can see this change being much greater than average. I would say it is unquestionably the largest change that we had in the past year. So it's a very significant bullish COT change signal. I'm not saying prices will skyrocket from here. You can see what happened on Friday. So of course awareness should be taken, and of course with knowing what happens with Brexit, of course caution is advised. But nevertheless it's there, and it is a signal that we may consider in our trading. Now let's move on and have a look at the 5-year trend and see how extreme the Canadian dollar has become. You can see that we're moving away from bullish extreme levels that pinpointed this bottom in the Canadian dollar, and since then you can see that there was a significant rise in prices, and of course we haven't reached those very extreme bearish extreme levels. The one I'm just showing you right now back here in 2012 was a great signal for selling the Canadian dollar. And of course this bullish extreme was a wonderful signal for buying the Canadian dollar. Now the big question is this a time to exit our long trade? I can't tell you that. The report shows that we have reached a relative bearish extreme, and of course if you look at the chart, even these relative extremes can be influential, and that of course should warn us that if we are in a long trade, then the big question is if this is going to continue or not. That's something you should decide. Moving on to the gasoline market, where we have an 18% change in commercials. You may see the change size over here, larger than average, no question about that. And again, it is a bearish COT change signal that may affect the gasoline market in the next couple of days. Moving on to a 5-year chart, let's just have a look at the extreme situation in gasoline. Well, there's not a significant extreme that we can talk about right now, actually. We're more or less in between the two extremes. We would be reaching a more bullish extreme if commercials could reach about 40,000 contracts net short levels. And of course the same it can be applied to the large speculators. So it's really the change signal that I would say is a signal from the COT report at the time in gasoline. Let's move on and have a look at large speculators COT Extreme. We've got two markets with all-time COT extremes in large speculators positions, sugar and gold. Let's start with sugar, and you may see that the all-time extreme is not only present in the large speculators, but also in commercials. And of course, jumping to a 5-year chart, everything becomes more visible on this longer term chart. So there's the extreme. We had a decline this week, and of course the big question is, would this decline continue? And of course in this case, in a couple of weeks time, it's going to be a very easily recognizable top with a recognizable extreme. And of course, then it's going to be very easy to say, oh my God, the signal was so wonderful. Why didn't I take it? And of course, it's very difficult to pinpoint the exact location of a top or a bottom. So I never advise you to try doing that. I'm just saying that this extreme is present. Stress levels are very, very high in sugar. And of course, the bearish picture is becoming more and more stronger as we go ahead in time. Of course, the extreme widens. So moving on to gold, let's have a look at the gold market where we have all-time COT extreme signals, again, both in commercials and large speculators. Here we have a 5-year chart and clearly a very strong bearish COT extreme. Now, of course, with gold, and of course, things that just happened in the economy, the global economy and everywhere, I would suggest you being very, very cautious with gold market because there's always a strong probability of gold rallying if things are risky in the world, and maybe that's the case. I'm not going to go into details into that. This is not a fundamental analysis, just simply the COT report analysis, which is telling us that there's a very large bearish COT extreme in gold. Commercials are heavily short in the market, while large speculators have built up huge net short, net long positions that they've never had in the entire COT history of gold market, which of course is very significant. Of course, as I just said in sugar, these extremes may be present in a market for quite some time, even a month before we see a reaction from gold. So, but nevertheless, it's there, and I think we should keep our eye on gold and see how far it can go. And then the last but not least, we've got palladium, another metal market with a strong extreme in it. We have a 495 report extreme in large speculators and a much greater 670 report extreme in commercials. And that's basically showing us that they're almost going to net zero territory, which, as you can see on the 5-year chart, is a very extreme place for these traders to be. So this is a bullish COT extreme, and which is of course interesting to see because we had a bearish extreme in gold and a bullish extreme in palladium, but that's the case, and we may see an even greater rally coming in palladium. So it's always interesting to see when correlating markets are showing us different COD pictures, but that's the case right now. So yes, we have a bullish COT extreme in palladium. We're expecting that this decline that we can see on the chart will end, and we would expect prices to move higher in this market. Okay, that's all for this review. Don't forget that we have other COT charts available for free at our COT charts page. But if you would like to have a more in-depth and detailed COT analysis, then of course this is the page you should be looking at. And I hope you enjoyed this review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.